I had to realize that. Let's see. There we go. That's the input. Perfect. Okay, great. All right. Wanted to make sure you guys could hear me okay. I think that audio is a little bit better. So, good evening, everyone. Don't worry, this won't be long. As we're going to go into, of course, some of the questions that I've gotten for today. And I always try to write some down just so I can kind of give you guys, typical, I won't say typical answers, but these are typically the questions that I get. On a day-to-day basis, and I want to make sure that I'm able to get those questions answered not just for that person, because they've already gotten that question answered, but I think that other people may need to necessarily have the answer to this question, and that is, where can you get a first-time home buyer loan? So let's go straight into it. Number one, first-time home buyers, there really isn't a loan per se when you call it a first-time home buyer loan. Okay, the loan is always going to end up being either an FHA, conventional, VA. Those are usually the top three loan types. Okay. And you're not even able to take advantage of a VA loan unless you have, going through that process. If you served in the military, so you may want to double check this, make sure that you did have an honorable discharge and that you do meet the rest of the qualifications to use that VA loan. Other than that, you're more than likely going to be using an FHA loan or conventional loan. Okay. Those are the loans that many first time home buyers usually end up going with, assuming that they don't qualify for any of the VA benefits. Okay. So, an FHA loan, you guys may have already heard about it. That's essentially where it's an owner occupied loan. And you only have to put down 3.5%. There is an appraisal and inspection that kind of comes with that appraisal as well too. And so that's usually the direction that many first time home buyers end up going. Okay, don't worry, guys. I'm gonna make sure you get your questions answered as well. And then, of course, you have a conventional loan as well too. With a conventional loan, you're either gonna have to put down 3%, 5%, 10%, 15%, or 20% down. That's another popular loan type that many first time home buyers go after. Okay. So let's go ahead and see. I see you guys got a couple of questions. Good evening, Fatina. All right. And then, of course, Ricardo's got a question right off the back. Hey, wanted to know, and this is a good question. So, hey, good day. Wanted to know if you know of any nationwide grants for first time home buyers. Very good question. You can actually go to, I would say, start with Google as far as your state goes. Okay. So I will say go ahead and start with Google and then just Google your whatever state that you live in and just type in first time home buyer grant or down payment assistance. Most states are going to provide some sort of down payment assistance, and that's usually, and that can range. Don't forget, guys, there's three forms or three types of down payment assistance. You're going to have state-based down payment assistance. That's where it's going to be based on the requirements from your state in order to get that down payment assistance that you're looking for. The second type is going to be area-based down payment assistance. That means that if you're looking to purchase a house or a property, I should say, in a certain area, and then that area may qualify for down payment assistance. And then you have the third type, which is lender-based down payment assistance, and that's essentially where you get that assistance directly from the lender. And again, you have to meet those qualifications. Okay, but I would say starting off with just Googling it. And of course, if you don't feel like that is not giving you the answers you're looking for, you can always call a local lender. You can always start with companies like Guarantee Rate or something like that, just because they're a nationwide place to kind of start with. Is not everything is not online based. There's a lot of banks, where it's not so drive by bankish, which means that you don't have to have a 680 credit score, 650 credit score to get that approval. So I would say start there. There'll be a great place to start. So hopefully that answers that question. So now don't forget, just like you're able, so now you got the first time home buyer loan, or of course going through normal FHA, normal conventional. Okay, for those of you who don't know, you can go up to 4 units going with FHA. Okay, typically if you are looking to purchase a property of 3 units or more, which is a 3 unit or a 4 unit, 5 units or more is going to be commercial. That's a different type of loan. You're going to have to put down 20% or 25%. But if you're going to go up to 4 units, then keep in mind with a 3 unit and a 4 unit, you will have to have what they call additional reserves. A reserve is essentially a mortgage payment in your savings. So, for example, if the mortgage payment is $2,000 and they want you to have 3 months reserves, that's going to be 3 times 2,000. That's $6,000 of reserve money that they want you to have inside of an account. It doesn't have to be a savings account. It could be a retirement account, some type of investment account, but typically it's going to be some type of savings account so they can see that you do have access to that just in case people don't pay their rent, because that does happen. We saw that in 2020, whether it was forced that people could not pay their rent because they lost their jobs, or if it's just something that happens in the economy where that there just happens to be some type of a recession or money loss. Okay, so keep that in mind as well. So, of course, another question was, good evening. What's going on, Chief Maurice? Hope all is well. He says they have a 660 score. Well, congratulations, sir. You most definitely qualify for home ownership. And based on what state you live in, you more than likely will qualify for down payment assistance as well, too. So keep that in mind, too. Okay. And Ricardo, no problem, man. If you got questions, let's get them. One last question. I didn't ask you from another night. Once your student loans are forgiven, what are the tax implications, if any at all? Um, that's a very good question. So typically, when you are, well, I would say for one, when you, and again, this is not necessarily tax advice. I don't want you guys to know because I'm not an accountant. However, you typically, when you have student loans in general, they usually send you, I believe, a 1098. That is if you have, interest that has grown over time on that student loan. But in this case, if it's forgiven, typically, if there's anything forgiven, I believe it's called I think it's another 1098 or something like that. Or maybe it's a 1098T or it's something like that. But make sure you ask your accountant about this. But usually, like, for example, if a person has a repossession, and that amount is forgiven, then you have to show that as income. So my assumption would be that if your student loans are forgiven, you're more than likely going to get a tax document for that particular year that they were forgiven. And then you would have to add that as income. Okay. So again, I'm not sure how that would work because it's a student loan versus like a repossession, but again, that's what I would most definitely assume. But if you talk to an accountant, you most definitely will be able to get the right answer to that as well too. Okay, so hopefully this video was helpful to you guys. If you all know of anyone that is looking to go into home ownership or rental property ownership, then let them know a first-time home buyer loan is not necessarily anything different than going with a traditional FHA loan. You can get that FHA loan from any lender. You can be a drive-by bank. I forgot to give you guys what the answer was for that. A drive-by bank is any bank that you can drive by. Okay, so nothing special. Just a bank that you would, Chase Bank, Fifth Third Bank, any bank that you could drive by. That's typically what your drive-by bank is going to be. Sorry about that, guys. All right, so next we have, when are you going to do another talk on foreclosures? Man, so when you say foreclosures, are you talking about like buying foreclosures or someone that's going through a foreclosure? There's a lot of different, kind of pieces, to that. But either way, we can actually kind of go into that a little bit now. Excuse me, guys. I got like this thing in my throat. Either way, but like if you're looking to buy a foreclosure, most of the foreclosures are going to be on the MLS search. You can look this up through like Zillow or something like that. But usually, if you are going to foreclosure, just keep in mind. Let's see here. Oh, buying a foreclosure, easy. So here, I'm gonna give you guys like the 2-minute version, but I'll most definitely add this to my video list. And I'll do I would say a full segment on that. Okay. So if you're buying a foreclosure, number one, you got to know where the inventory is. So the foreclosure inventory is going to be on a lot of different places. You could just Google, foreclosures. But there's going to be a lot of websites. You can always start with like, your MLS. You can have your agent set you up with that. That way you have a foreclosure that is legit. There's a lot of websites out there where they'll pull the information in, but they don't erase the information on purpose once the property is sold to keep bringing people to the website. So guys, that is a strategy. It is not a mistake sometimes when you get to these websites and they have outdated address information, outdated property information. You got to keep your eyes on that. And the reason why they do that is because you get there, and now that you're there, you're going to easily keep searching around, creating a search, creating a profile, constantly looking for a property that may not even exist. I strongly recommend getting the foreclosure list directly and only from a real estate agent, or you can go with Zillow or Redfin. Those are going to probably be your closest best options. Any other sites are going to be kind of hit or miss unless it's a government site. Okay, government sites like HUD Homes. I believe it's HUD Homes USA. And again, sites that end with GOV. So it's going to be a little bit different because there are different segments of different, inventory. Inventory doesn't necessarily have to be in one specific place, but when it is on the MLS, more than you're at least going to know that that contact information is going to work. But if you're going through HUD Homes, that's another great option as well too. So now here's the catch though with buying foreclosure. So number one is finding out if the house is for sale, if it is in foreclosure. Here's the thing that you got to realize is that depending on the loan type that you're going with, that's going to determine, what the condition of the property, what condition the property has to be in order for you to close on that loan. For example, if you are going with an FHA loan, they're going to do an appraisal, not just for value, but for safety conditions as well. And they're going to also be looking for things like chipped paint, a working oven, making sure that things are not broken stairs, missing handrails, like just basic safety features, things that honestly make sense, smoke alarms, CO2 alarms, things like that, right? So either way, when they do that, see, when a person is selling a house in foreclosure, you're dealing with one or two different types of people. A seller that has given up on the house itself, or you're dealing directly with the bank. If you're dealing with either one of those situations, your best bet is hopefully the seller is still there, because if the seller is there and they're selling their property, even if it is in foreclosure, they may not necessarily be the direct point of contact, but at least you know that they may be willing to make some repairs so they can just, just shorten the balance that they actually do owe the bank. Just because the property is in foreclosure does not mean that that person cannot still benefit from the highest value possible. And of course, in the right market, that trust me, a person would rather sell their property. Where I'm representing I would say quite a few sellers that are in pre-foreclosure right now, and we're able to sell their properties. But since they got since we got in some offers, some of the people that have certain loans, like FHA, when they did the appraisal, the property needed some repairs done. Okay, if a bank is actually watching that, some banks may say conventional only to reduce the chances that it's going to need repairs. Conventional does not necessarily mean that it's not going to need repairs. I've seen conventional loans ask for some repairs. It's extremely rare, but I've most definitely seen it for sure. But it's going to reduce your chances of repairs if you go with the conventional loan, or obviously if you're paying cash. But if you're going through FHA and the bank is the point of contact for that particular property, chances are they're probably not going to do those repairs. So that's why they want you to either buy them cash through an auction, or they want you to have a conventional or a conventional loan type or a rehab loan. Okay, guys. So hopefully hopefully that information was helpful. Want to make sure you got that question answered, Derek. So thanks again. Greatly appreciate you guys being here. So of course, if you like this video, like it, you want to share it, and as always, be sure to subscribe, as we got nothing but great content well on the way. Thank you guys so much. And also, too, if you're looking to qualify for home ownership and put yourself in position to go into home ownership, to go into rental property ownership, or just simply improve your credit score, of course, you've been seeing this down at the bottom where it says that you can go into, start. Oh, I didn't even have it at the bottom. So my bad. Let me go ahead and put that back up there. But either way, if you guys are looking to go ahead and improve your credit score, get ready for home ownership, rental property ownership, you most definitely can do so with our advanced credit blueprint. It is actually at a great price. So you most definitely want to put yourself in position to go ahead and do so. Many of the people I've helped, accomplish their credit goals was with this exact same strategy that's inside of my advanced credit blueprint. So go ahead and grab that and get closer to your credit goals. And I'll see you guys